What about buying a house? Is that a good investment?
I wouldn't consider buying a house to live in an investment. It's sort of is. You get an asset, but you're buying an asset that funds your housing consumption. It kind of pays you a dividend that's sort of like getting rent from the house that you own. But when you do the side-by-side comparison, which I think is the only way to think about this, if you compare buying a house, so that means in Canada, you'd usually save up for a 20% down payment. So you put 20% down in your house. You take out a mortgage to finance the rest. You're now living in the house. You're paying your mortgage payment. You're paying for some maintenance costs. You're paying for property taxes. Alternatively, you could have rented the house. That 20% that went into buying a home could have been invested in the stock market. So again, we're back to the idea of opportunity costs. And the other important thing here is that renting typically has lower cash flow costs than owning. So these are the unrecoverable costs of owning a home. Mortgage interest. So that's when you buy a house and you borrow to fund the purchase, you're paying interest to the bank. I call these unrecoverable costs. That's money that you're paying for the use of money in this case, and you're not going to get those dollars back. It's gone. Opportunity costs. So that's what I just mentioned. Whatever equity you have in a home is equity that you could have otherwise invested in the stock market. The capital portion, the principal, the price of homes has increased around inflation, at the rate of inflation, maybe a little bit higher historically. Stocks have far outpaced inflation. So by having money sitting in a house as opposed to invested in the stock market, you have what is called an opportunity cost. You're not earning returns you could have otherwise been earning. So that opportunity cost is one of the largest costs of owning a home. So I've got mortgage interest, the opportunity cost of equity. Property taxes are another big unrecoverable cost. Property taxes vary depending on where you are, but it's say between 0.5% and 1%, maybe sometimes a little bit higher. You get utilities and some services in exchange for it, but it's an unrecoverable cost. You pay that, you've got nothing left afterwards. Then we've got maintenance costs.
Oh, this is the annoying one.
This is it's the annoying one, and it's the one that I think people underestimate the most.
Mm-hmm.
I started making content about renting versus owning a home years ago. I used to say 1% was a reasonable estimate of maintenance costs, and people would push back and say that's way too high. There's a bunch of academic literature on this too. It says it could well be over 2%. I think that's probably a more reasonable estimate. Having been a homeowner now for 6 years after renting prior to that, I'm fairly confident, at least in my case, that maintenance costs are far higher than 1 or 2% of the property value per year.
Yeah, I mean, I bought my first home a while ago, and fucking hell, I didn't think about the gardening, and the pool pump gets broken, and then there's a crack in the patio outside, and then the heating system breaks, and then everything just seems to break.
And it's always breaking.
It's always breaking. Every time I go back there, it's in a different country, the first week I'm just spent looking at the things that have broken since I was last here, and like making a list of the new expenses, and it's never cheap.
No.
And if I was renting, that wouldn't be my problem.
No.
There's also like another cost here, which we don't talk about, which is like the time you waste on the maintenance. Like when we think of maintenance cost, I imagine people are thinking about the fees to fix things, but actually the time I spend having phone calls and speaking to people for me is worth a lot more than just the costs. But anyway, yeah, maintenance cost.
Yeah, the coordination is huge, and you could outsource that, but that would be expensive. And depending on how valuable your time is, it could make sense to outsource it. But I agree with you. I do the same thing. I spend time on the phone finding which contractor is going to come in and fix this thing. Mm-hmm. And then you have to wait for them, and then maybe they're late. Mm-hmm. Yeah. So that's maintenance costs. We have emergency cost here, which is really a subset of maintenance costs. So you can have big things like the roof needs to be redone, the foundation cracks, whatever. Those can be very significant. And one of the challenges with those types of big costs is that you kind of have to have liquidity available to fund them. Mm. And that means that you have to have cash sitting somewhere, or at least some liquid assets sitting somewhere. So probably not invested in the stock market, which also has an implied cost to it.
Which is more opportunity cost, right?
More opportunity cost, exactly. And then this one's interesting. And this is one that I don't think I appreciated until I owned my own home, which is renovation spending. We talked about maintenance. When you fix something in your house, you don't just fix it to get it back to the baseline level that it was at before.
Yeah.
You make it a little bit nicer.
You're right. I never did that when I was renting. So the side by side.
So you run the side-by-side comparison. You account for all of those unrecoverable costs that the owner has. You account for the renter investing in the stock market and investing the cost difference, the cash flow cost difference between renting and owning each month or whatever frequency. And what you'll find, and I've done this with projections, so looking at expected stock returns and expected real estate appreciation, you can very easily show that there is unequivalence. There is a level of rent where you are indifferent between renting and owning. I did a video years ago that has millions of views now where I came up with this idea called the 5% rule. So I took some of those costs. I took property taxes, maintenance costs, and the cost of capital, which is the opportunity cost and the cost of borrowing. I wrapped all that up and said, we've got roughly 1% for property taxes, roughly 1% for maintenance costs, which is probably way too low, as we just talked about. And I said 3% for opportunity cost, which I think is also on the low end. And you put all that together and you get 5%. So I said, okay, if you divide the price of a home by 5% and then divide that number by 12, you will get the monthly rent that is equivalent to the unrecoverable cost of owning that home.
Okay, so let's do that. So I'm thinking of buying a $300,000 house. What's the math that I need to do to figure out if it's better to rent?
Multiply by 5% and then divide that by 12.
Divided by 12, okay.
You're brave. I usually have a rule to never do math live on a podcast.
I can edit, so just in case. Okay, the result is 1,250.
There you go. 1,250 is the equivalent rent where you're roughly break even between renting and owning.
So if I could rent for 1,250 instead.
Or less,
I should rent.
Renting is a better financial decision. So this is an important part of this topic. We can show financial equivalence. And just that is important. Like, we can show that there is financial equivalence between renting and owning. I've done more robust versions of this analysis since then. PWL has a calculator on our website where you can see the break even by putting specific numbers in instead of just doing the rough rule of thumb. Because things will change it. For example, if your asset allocation is more conservative or more aggressive, that opportunity cost number can be different. If you're a taxable investor, meaning that you're taxed on your investment gains by investing in the stock market or the bond market, your opportunity cost decreases because the after-tax expected return on stocks and bonds decreases relative to homeownership. 5% is a very rough rule of thumb.
Do you think for the average young person, let's say someone's, 25 years old, and they're thinking about building their wealth over the long term, do you think they should be buying a house as an investment, or should they be doing something else?
I think for young people, it's really tough. And it's tough for a couple of reasons. One is because home prices are high. You have to save up a lot of money to buy a house. Another one is that it can limit your mobility. We've seen in Toronto, in Canada, where I'm from, condo prices in particular, have plummeted. They've fallen off of a cliff. If you bought a condo in Toronto and you get a job offer somewhere outside of Canada, what are you going to do with that condo that's at a big loss? You're kind of stuck.
Yeah.
Or you have to try and rent it out, and now you've got this just difficult situation to deal with. And plus, there are big transaction costs if you're selling a place. So for young people, I do think that homeownership can be tricky because it can limit your mobility, your ability to go and find maybe higher paying work. It introduces a risk that you probably don't need in your life because you may end up moving somewhere else. And then people often move up where they want a condo today, but they're going to want a house later. For my family, I met my wife, I was renting a place. The first place we met in, a second place, a third place, and a fourth place. We rented 4 different places as we were having our family. We have 4 kids. And so our needs were changing over time. We needed a bigger condo, and then we had a townhouse, then we had a house. But the lease ended, and we gave notice, and we left. We found a better rental that was more suitable for our needs. If we had been homeowners, the amount we would have paid in transaction costs to do that would have been insane. Or we would have had to buy the house that we were going to have forever much earlier, which would have introduced significant opportunity costs.
That's one of those things that's just impossible to measure, and because it's so intangible, but like the psychology of feeling like you can't easily move. And I see this a lot actually with people that apply for jobs in our company, is in the interview process, they'll say, well, I've just bought a house in insert city. And you can see this, their sort of psychology is holding them back from taking an opportunity because they've made an investment in a particular city. And so they might lose, as you say, like an opportunity in New York or LA or London because mentally they feel committed to a place.
Yeah. Now, the flip side of that is that if you're really sure that you want to stay in one place, one of the best ways to accomplish that is buying.
Who can be sure?
Yeah, you can't. But if someone was really sure, maybe someone has, maybe like me, I have 4 kids, they're all in the same school. It's very unlikely that we would move.
The other big mistake I think I made is I bought a holiday home. That was a terrible, well, I shouldn't say terrible idea, but kind of a terrible idea, in part because of the same reason, in part because it means you only go on holiday to one place.
Yeah.
Which is like defeats the point of a holiday.
Yeah. And I have not done that. And the main reason is the mental overhead. I don't like having to think about one property.
Mm-hmm.
I can't imagine having to think about a second one that I'm not at.
It's actually a dumb idea. I don't know why I did it. I don't know why I did it. Especially when you're like young. It's like the whole point is you can still walk up mountains and do things. So you don't want to be sitting in the same house every day.
Yeah.
Are homeowners happier than renters?
Depends how you slice the data. If you control for property types and neighborhoods and all that kind of stuff, no, they're not. If you don't control for those things, I think owned homes do tend to be a little bit nicer and better maintained. They do tend to be in better neighborhoods. So uncontrolled renters are a little bit less happy. There's multiple studies on this. Statistics Canada has a really good one that does exactly that. They have controlled and uncontrolled life satisfaction differences for renters and owners. If you're a professional who is thinking about buying a house in a nice neighborhood or renting a nice house in a nice neighborhood, it's unlikely that you'll be happier in either case. If you're forced to be a renter in a not very nice neighborhood because it's all you can afford, you may be less happy, but it's not necessarily the renting that's making you less happy.
Is there any particular group of people that you think should be buying a house?
Yeah, so people who are very risk averse, people who want to stay in one place for a very long time.
Because they have a family or something.
Yeah.
Yeah.
And you don't want to be priced out of the market that you live in. This did happen in some cities in Canada in recent history. It's now reversed, but there were people who were getting priced out of their market. They've been renters for a long time and rents went up so quickly that they just couldn't keep pace. Mm-hmm. It depends on your rental market. Some rental markets are controlled where that's less of an issue. So you do have to think about things like that. But yeah, if you want to stay in one place, owning your home is the way to do that. But it's a double-edged sword because if you realize you want to leave, you might be stuck. And then the other big one for who should own a home is taxable investors with high tax rates. And again, that comes back to the opportunity cost, where if you're paying a lot of tax on your investments, whereas real estate tends to be tax preferred, in Canada, gains on your primary residence are tax-free. US has I believe, an amount. And so that's another thing to think about, where the opportunity cost changes depending on your specific tax situation.
When we have these conversations about buying a house or not buying a house, one of the things I see a lot in the comment section is people sharing their case studies of them buying a house 30 years ago, and now it went from being worth $100,000 to $600,000. And they're asserting that that's evidence that it's a good idea. You probably see this a lot.
This is the thing. This is the example. And if everyone has the family member that bought a house for $70,000 and sold it for $1 million.
I'm just going to read you the top 4 comments, and I'd like to get your response on them. The first one is, the not buying a house does not work in the UK as 90% of rents are higher than a mortgage cost. Also, if you want to start a family, you need a stable place to raise your children. And with renting, you can be kicked out within a few months' notice and your whole life could be turned upside down.
I personally think there are ways around that. And as I mentioned earlier, I did rent for 6 years of my life with a wife and an increasing number of kids. The 2 things that I always made sure to do were to rent from professional landlords. We did have one experience renting from a sort of mom and pop person who had bought a condo and rented it out. And that wasn't great. But after that, we were very careful about vetting our landlords and only renting from professionals. And then the other thing that we did, which addresses, at least in Canada, addresses one of the other points there, is we would sign long leases. If we want to stay in a house for a few years, we would sign a multi-year lease. And landlords do tend to like that. The other point that was in there that I think is really important is that rents are higher than mortgage payments. I think this is one of the biggest mistakes that people make when they're making the rent versus own comparison, is they'll say, this is my mortgage payment, this is my rent. If the mortgage payment is lower, owning must be better. But that's not the case. As we talked about a minute ago, you have property taxes, maintenance costs, potential renovation spending that you wouldn't do otherwise, and the opportunity cost of capital. When you add all that up, the cost of owning a home is far more than the mortgage payment.
This guy here said, I bought a house. It's the best thing I ever did. It's launched my mindset in new directions. Remember that having your own space has profound psychological impact and can be life-changing for some of us that want to live in a healthy environment. What do you make of that point? Does it have profound psychological impact?
If someone believes that it does, and they've really taken the time to reflect on their life and has decided that, yes, it is in fact true that it has had a profound psychological impact, of course that person should own a home. Of course they should. Is it true for everybody? I don't think so.
Dawn said, my experience, I purchased a house in 2013 with 20% down payment deposit. My total payment, including taxes, insurance, HOA, homeowners insurance, is $1,800 a month. As of today, the exact same house is renting for $4,000. The property value has also gone up 3x. I'm glad I bought my house.
Yes. So there are cases where real estate allows you to use leverage very easily, as Dawn mentioned. And if you end up buying in a market that goes up a lot in a short period of time, it can be really, really good. However, and this is what we've seen in Canada more recently, it hasn't touched other markets yet, although of course the US has had their own declines and so have other countries. But Canada's right now in one of the biggest real estate price drawdowns when you adjust for inflation, going back to 1975. And so if you had bought, 7 years ago, and then looked at the price in 2022, you'd think, wow, I'm a genius. Of course, everybody should buy. But if you had bought in, I think it's 2021 was the kind of peak, and you look at it today, you're thinking like, wow, I've ruined my life. So yes, there are examples like that for sure. But that is not what people should expect every time that they purchase a home.
So are you saying that the future is not going to be as the past?
For this, I know the Canadian market best, but I think it generalizes outside of Canada, where we've seen record decreasing interest rates. So that's changed a little bit now. But for a period of time, we had interest rates going down, down, down. In Canada, we had a ton of immigration. I have no problem with immigrants, but we had levels of immigration that were just not compatible with the amount of housing that we had in Canada, which is contributing to prices going up. We have a housing supply just not growing quickly enough, which are all things that Canada is addressing now, but all that caused prices to go crazy, which is, I think, why they've come down in such an extreme way. So I'm not saying necessarily that we're never going to see high house prices again or house prices going up at an extreme rate again. But in Canada, at least, that has now normalized, or at least started to normalize. I don't think it's reasonable to expect stock-like returns from real estate forever, even though we did see that for some years.
So for most people, then, you think if their goal is to make money and they care about mobility, being able to get up and go if opportunity arises, a better investment decision would probably be just investing in an index fund, which gives you exposure to the stock market. Yeah,
I think the mobility piece is key there, because remember, just from a wealth perspective, we can show that, hey, these are pretty close to equivalent. Mm-hmm. But if mobility matters to you, I think that matters a lot. If you have unique investment opportunities, that can be another reason where your opportunity cost is really high. Like I had an opportunity to buy equity in my company years ago. And if I had been a homeowner I think I actually had just bought a house, and I think I even had to reduce the amount of equity I bought because I think our well pump broke like around the same, anyway, it was a whole thing.
Annoying, isn't it?
But that's like, there's opportunity cost in the stock market, which is, call it 7% or whatever. But there's other opportunity costs that can be a lot higher, like in that specific situation.
And the next one there is number 7.
Yeah. Missing tax planning opportunities. This is something I think people just don't think enough about, but it's not terribly complex, but there are simple things that people can do to minimize the amount of tax they're paying. For most people, it's just optimally using things like, in Canada, we have the RRSP and the TFSA. In the US, it's the Roth and traditional IRA and 401ks. Using those things optimally make a lot of sense. So then the rest, other types of tax planning tend to get more country specific. There tend to be lots of things, particularly for higher income people, that you can do to pay a little bit less tax. And I think...
What about for lower income people?
For lower income people, the government accounts that are provided
like the ISA in the UK.
Yeah, exactly. Those are probably the best thing for people to be focusing on. But even then, people are often not using them optimally.
One of the things people don't talk about enough is all the ways that rich people do things to avoid paying tax. They hire people so that they don't have to pay tax. And I hear about all these crazy stories of like, I've started this business on the side here so I can get a real estate license. And if I get a real estate license, I don't have to pay the same tax on this thing here. And I move the money around here and I flip it around there and then I don't have to pay any tax. Most people, like the average people, don't have any loopholes that they jump through.
Yeah, it's true.
And even one of the crazy ones I learned about when I got some money was that you can take a loan against your stocks and there's no tax on the loan. So if I have $1 million of Facebook stock, I can go to a bank and get $500K in cash loaned against that stock without having to sell it. And then on that $500K, I have no tax to pay. And I can just hold that Facebook stock. And when it goes up to 2 million, I can go back to the bank and say, give me another $500K.
You could, but if it goes down, you get margin called and they have to come up with the cash to...
Don't they just sell the stock?
They might, but then you're selling after it's come down. So it's not risk-free, but yeah, that is a thing that people do.
I guess everybody could do that, right? I mean, most people could, if they invested in the S&P 500, they could go and get a loan against that investment and that loan would be tax-free.
Yeah, it's the same rules for everybody. But I would still say that you're taking a lot of risk by borrowing money against risky assets like that.
Mm-hmm. Okay, so tax planning, there's nothing else to cover there in terms of the average person?
Yeah, I don't think so. But it is an important thing for people to think about. If they're thinking about what mistakes might I be making in my financial plan, they should definitely be thinking about, are there tax planning opportunities that I'm missing?
How would they find out?
It's a tough one. A good CPA.
What's a CPA?
An accountant, a good tax professional should be able to identify tax planning opportunities for you. Good financial planners, similarly, should be able to identify good tax planning opportunities for your situation. But as you said earlier, the reality is there aren't that many things that people can be doing. And it's really things that you could figure out how to optimize once, and then you're kind of set.
If you love the Diary of a CEO brand and you watch this channel, please do me a huge favor. Become part of the 15% of the viewers on this channel that have hit the subscribe button. It helps us tremendously, and the bigger the channel gets, the bigger the guests.